This chart displays the yield spread, which forecasts the likelihood of a recession or recovery within the following 12 months. The gray bars indicate economic recessions. Here's how to read this chart. When the yield spread dips below the green line, a recession is likely. When it dips below the orange line, a recession is, well, imminent. In September 2022, the yield spread was barely positive at 0.39 and falling. When it does turn negative, it will be due to the Federal Reserve's short-term interest rate rising above the long-term rate. But when will we experience this inversion of the yield spread? Expect the yield spread to turn negative in the fourth quarter of 2022 as the undeclared 2022 recession settles over the economy and, of course, the property market. Skyrocketing mortgage interest rates and cap rates have seriously crippled both sales volume and prices, both of which began to plummet earlier in 2022. This chart shows how the stock price index and the home price index change over time in relation to one another. Stock prices have fallen sharply from pandemic-distorted heights, down 17% from a year earlier in the third quarter of 2022. This rapid tumble in stock prices indicates that the U.S. economy is exiting the pandemic period and entering into 2022's undeclared recession. In response, investors are tightening their grip on cash, choosing to wait out the slump before buying. California home prices have also begun a nosedive in 2022, following a decade of ascent. While real estate of quality remains a solid long-term investment, the 2020 and 2022 pricing picture makes this the worst time to buy for at least a decade. Current property owners intending to sell in the next few years will not soon see a return to today's prices. Likewise, for future property buyers, look beyond the 2023 recession to the upturn in real estate sales volume expected to arrive around 2026. This chart shows how far home prices have deviated from their long-term value. The black line, set at 100%, is adjusted to reflect annual property inflation at 3.5%. This 3.5 comprises 2% consumer inflation and a 1.5% California premium. Home prices in July 2022 were priced at 192% of their long-term value, down from their pandemic period peak. The fast and furious pandemic stimulus of 2020 fueled a veritable surge in consumer and asset price inflation. To counteract this excess, the Fed pulled back mortgage funding. In turn, the bond market reacted by demanding hugely elevated rates to fund mortgages. And as a result, buyer purchasing power collapsed. In the coming decades, rising mortgage rates will limit price increases. And in the near term, watch for prices to continue to fall back, slumping below 2019 levels by 2024 until they reach a price level consistent with long-term home values, which is likely in 2025.